Hello and welcome to Market Tracker Talking Points. We're talking today about the London IPO market in 2014. My name is James Hayden and I'm a lawyer in the LexisPSL Corporate team, and I'm joined today by Edward Craft, who is a partner at Wedlake Bell and also the chairman of the Corporate Governance Expert Group of the Quoted Companies Alliance. Edward, thank you very much for joining me.
My pleasure.
The IPO market in London, it's clearly picking up in the early weeks of 2014. What general conditions or events do you think best explain this upturn in activity?
Well, I think it's fair to say the upturn's coming from a very, very low base, which is the factor of the financial crisis and resulting recession. So we're not really comparing it with very much. The good news is that there is now a decent level of IPO activity, both currently and in the pipeline, for businesses which are really operating within the UK. Companies that came to market over the last few years generally were using London as a forum for a listing, but they weren't really UK-centric businesses employing many people in the UK.
And do you think the fact that there's sort of there's cash in the business, is that a particular draw for investors at the moment?
The reality is that if you're a business which is getting cash, you're in a more likely position that you can pay dividends. And I think an interesting factor of the market in more recent years is the increased attraction of earnings. There was a period from probably the mid-90s until the financial crisis where actually people forgot the value of income. One was just looking for capital growth and returns of capital. But there was a realisation that the regular payment of dividend is a key part of an equity growth story.
And looking back to the K review of the equity markets and long-term decision making, and that report that was issued in July 2012, are you seeing any differences? How right was Professor K in what he was saying, and with an increased role for dividends and a structure of the market, are things different now?
Whilst almost all of Professor K's work is something which I agree with, there's one aspect where I fundamentally do not agree with him, albeit noting that I'm not an economist. He clearly is, and is probably better qualified to say these things. He was observing markets over the 10 years to 2012, and he came to a conclusion that equity markets are not there to raise capital for growth businesses. They haven't been doing that. They were really behaving as secondary markets, recycling capital between institutions. Equity markets weren't created to do that at all. They were created to fund the taking of risk that couldn't be managed by third-party debt or any other means. You needed shareholders willing to put their money on the line. A return to a market where companies are raising new capital, coming to the market, will, I hope, start to prove Professor K wrong, that actually there is still a need for equity markets to raise new capital for growth businesses. Now, reflecting on the landscape of companies coming to market or proposing to come to market in 2014, there is a lot of private equity exit vehicles, but there is an increasing element of companies which are actually growth businesses looking to fund their expansion plans through shareholder funds. And Just Eat is the prime example of that. That is, it's interesting, it's retail, it's online, but it is a growth technology stock which has come out of Tech City. So something which should really be supported. It's creating, it's a new idea which is creating new jobs and new growth, and it needs risk capital to undertake that.
And how do you see sentiment? I mean, we've talked about cash with retail. How are you seeing what's going on in 2014? How is business confidence?
Well, in that regard, I'm actually going to reflect on the Quoted Companies Alliance Business Sentiment Index, which is prepared quarterly since mid-2011. They are looking at growth companies and the advisory community, and certainly within that sector of the economy, sentiment is as high as it has been over the review period. The sentiment index is now very, very positive, and there have been 6 quarters of sustained growth since the wobble in early 2012. Sentiment and confidence is high relatively to where it's been, and is growing.
We have a general election next year. What are the prospects for new entrants to the market for the coming year?
I think it's important to remember that the London markets exist within a global landscape, and therefore the possibility of political change, or indeed no political change within the UK, can be overplayed. Yes, I suspect there will be a disruptive effect on markets, particularly people considering IPOs in the early part of 2015, but in all likelihood that will merely postpone certain companies, etc. If the fundamentals are there, they'll be looking to come to the market.
Edward, thank you very much indeed. Extremely interesting. Thank you.
Thank you, James.